The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here this Monday, November the 26th. I hope everyone had just a great Thanksgiving. And if you were maybe without family around or friends, then I hope it was just a very satisfactory time, very relaxing time. And certainly here in the Boston area, we were very lucky to have good weather. It was really very nice. Now, this is kind of an important end of the month coming up here, November, because when you're looking at charts, there's certainly been that Friday very stealth move to the upside. That was a spectacular day, up 175 or something like that. On, in fact, it wasn't it down by like 65 or not even that. So maybe 75 or 65 around about noon, just after noon, and then suddenly the last hour saw this huge spike. Remember, we were talking the last week about what do you call, an up spike's fine. It defines a powerful move to the upside. A down spiral or also spike to the downside, same sort of thing. We were talking about crash, and we were saying, I've been asking for a while, what would you use on the upside instead of the term crash? What denotes kind of the magnitude? Crash implies for me a move to the downside that is extraordinary. Now, it could be that something was trading between 10 and 20, and now it's in the 20s, and suddenly there's bad news, and it cascades down to maybe 13, down 7 points. I'd call that, for that particular stock, a crash, because that took out the left side support levels and highs going back a period, and it took it out very quickly. On the upside, spiral, but you got to use two words. An upside spiral. Spiral sounds good. Well, that sounds twisty, doesn't it? Spiral. I don't know. Still thinking about that. Meantime, back at the ranch, we're giving back some, not all, but at least half, more than half right now, of the gains of Friday. The Dow is down 95 at 12,913. See, this is, I'll show what I'm looking at here in terms of the weekly and the monthly charts. The S&P is down nearly 10 at 1399. Let's go to the others. In fact, let me do this you know what? It's the beginning of the week. Let's look at this really. Liftoff. Jan, I like liftoff, but sometimes these things occur at a higher level. Jan in the den said liftoff. They occur in the at a higher level. I want something that essentially says, blast off would be probably even better. Blast off. Yeah, maybe blast off. But it sounds like you're swearing. Blast off. I don't know. I'll think about it. So here we've got the Dow. You see this 200 period exponential moving out? Okay, let's just go through some of the techniques in the ChapmanWave here. First, I want to thank Steve very much for the 2 hours he put in. Hope you feel much better. He was a little scratchy there, and I certainly hope that he's going to be feeling just great by tomorrow to do the show. And thanks for a great lead into my show. And, of course, after my show, I have Larry Pesavento. I mean, what more could you want? Great sandwich there. Excellent start off. Couple hours. I come in, and then we got Larry Pesavento. Then we've got, let's say, what is today? Monday? Yep. So then we've got the diagnostic hour. We've got, let's see. Oh, of course, I should remember that. You've got Dave White. And you've got, geez, you got a little bit of a layoff here, and you start to forget things, huh? Just 4 days? And then you've got Ken Shreve, and, of course, Tom O'Brien, 4 o'clock till 6. Now, let's just go through this. The Dow has had this beautiful upside resistance all the way to the 13,653, makes this pattern I call the drop back, a double top pattern to the 13,661 level, a peak F. Those are the ChapmanWave notations. And then plummets down. And where does it go to? It goes to that entire safety range, that support range between 12,492 and 12,452 by going to 12,471 in the left side, right side price time match. By 1 day, it makes the low of 12,471. And now it screams above the 200-period moving average. Look at that indicator right there, that beautiful indicator. If I can just get it to click on there. I want it to show up, not that. There. Nope, I can't do it. I don't know why I can't do it. I'll try it again. I'm not doing it. All right. That blue line is the 200-period exponential moving average. Look what happens when the 9-period moving average slices underneath the 200-period moving average. Now we've got to see whether or not it has the capacity to slice back over the 200-period moving average, as it did back in that turnaround from that was back in late May, early June, where you got that blast off to the upside, which so far replicates even today 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Day 5 is the red bar right there that made peak B. This is going to be making peak A, 13,011, 13. Yep, this will be peak A, gray A, because it's underneath the major top. So this is what I'm looking at here. Let's just do this in terms of the ChapmanWave. I've got a webinar coming up, a 2-day webinar coming up Thursday and Friday, a week from this Thursday and Friday, December 6th and 7th. Just, you're at home or you're in your office, whatever it is, you just sit there. If you're overseas, it's the evening time, it's just a beautiful time to be doing something like that. Not only that, the information that my technical indicators are going to be giving by the end of, beginning to the end of next week, the end of November, starts the beginning of December, are going to be so pertinent to what's going to be successful in what could be successful the first period of January, February, March, first period of 2013, what should be weak, etc. This is just a perfect time to be able to set in motion the kind of techniques that will really help you. I can't look at everything all the time. So you're looking at charts. You might be looking at completely different charts than I'm looking at. But you'll be able to do the same kind of analysis. That's what it's going to be. You get the CD, Introducing ChapmanWave Methodology. There's a webinar for free. I'm so determined that I want people to succeed in this that I'll just be, usually I say for a month, you can just email me any old time. Actually, you can just email me any old time. I will help you right through your learning the process to be able to get really good at that process. I'm just determined. I'm an advocate for the ChapmanWave. So let's see what can happen here. So from the Dow, that V-shaped pattern that replicates so far, the V-shaped pattern back in late May, early June, is unfolding. What will change that dramatically if there is a close underneath 12,800? 12,844 is that red line, the 9-period exponential moving average. If that, unlike what happened here when it turned down, that was the day, I'll give you the day so you can check your own charts, the day of 11th of June, 2012. If unlike that particular period, the fast-moving average deflects lower, the MACD starts to turn down, and the stochastic, which is at 48%, and at that particular day, the stochastic was way. You see, the reason why there's a difference here is that on the 11th of June, the slow stochastic was at 74%. No, that's the red one. 66.70%. The fast-moving average was 74.71. Look what's happening here. You've got way weaker indications. You've got the stochastic at 40.49. Yes, there's a difference. But as long as the beta between the fast-moving average and the slow-moving average of the MACD is working for you, that's going to be very important. So we'll run the numbers. The Dow's down 99 at 12,910. The S&P is down 8 at 1,400. The comp index is down 12 at 29.54. Gold is down only $3. Had a really good day on Friday. It's at 17.48. Silver's down 11 cents at 34. Now, high-grade copper has been struggling. It's at 3.52, down 35 cents. I looked at this really closely. I just didn't feel I wanted to go long any copper stocks right now. I need a little more evidence to say that this is going to be a much longer-lasting move up. Crude oil is down 85 cents at 87.43. Bonds are up over $1, $1.02 at 151.03. So let me do a couple of things here. 877-927-6648 is the number to call. I'd love to hear from you. This is just a perfect time to be calling. Why is it a perfect time to be calling? Because there are certain stocks that are acting really well at this particular point, and you might be interested in using some of the techniques that I discuss here in possibly looking at stocks as longs. There are some stocks that are behaving quite poorly, and those would be the shorts. Let me show you something. When you get to this particular technique, very often what I look for is the confirmation to go from a buy signal to a buy mode. This is something we spend a lot of time on in my seminars, webinars, workshops. How are the MACD and the stochastic acting as you come out of the gate and you become a little bit more mature? On the fifth day of a rally like this, it is mature. If you look, for instance, when I talk about the chart patterns, so far, this is a positive price movement, excellent price movement. I don't have the veracity, I don't have the strength in the stochastic and MACD to say that I can immediately extrapolate the data right now and say, oh, yeah, this is that V-shaped pattern, and that within, what did I say to subscribers this morning? I said, within 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I think 10 somewhere around the 29th, 30th of November. There should be a price that hits the 13,290 to the 13,289 area, somewhere around the 18,290 area. If that's the case, that'll be really positive. Why? Because you had a potential for a ChapmanWave, not a ChapmanWave. You had a potential for a head and shoulders pattern based on the activity in August through early September of last year. That's the left side shoulder at the 13,030 level. Then that whole 13,656.60 area is the head, double head, in fact. And then you get the right shoulder that goes to the level around about 13,290. And then you plummet it down, and where do you go to? You held this beautiful support level. Now, what's important about this is that you can now get an inverse head and shoulder to the upside. So this is what I'm looking at. Let me make it as simple as possible. In the Dow, any move into the 13,090 to 13,130 area that holds is extremely positive. It says this is a really good chance you're going to go very quickly towards the 13,290 to 13,300 area. However, if by Wednesday there is a slide, and that slide takes you under Friday's low of 12,832, I'm going to make it a little bit more clear. 12,790. Close below 12,790. That's that arch formation. So it means that we've got to look at stocks that are working very nicely to give us the sense that you can go much higher, and the ones that aren't working. We'll be back with Dan in the Cayman Islands straight after this. We'll be back. Dow's down 100, S&P's down 10.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We are back, and we're going to go straight to our first caller. We've got Dan in the Cayman Islands. It always sounds so cool, the Cayman Islands. Hi, Dan. How are you?
Very good. How are you doing today, Basil?
Very well, thank you. So you got to tell me now, the weather is what? Just kind of perfect, or is it just kind of perfect?
Yeah, well, it's perfect here now because we're getting our winter weather, which is actually my favorite, like about 80 degrees or so during the day and sunny with a little bit of wind, so it's beautiful.
I can kind of handle that very well. 80 degrees. You'd like to look at Facebook, am I correct?
Yeah, that's right. It just seems like since that last lockup happened, it's looking stronger. And especially there was like a 2350 to 2450 sort of resistance area, and today it pushed up through that. I don't have a position, but I was wondering what your thoughts are on it, see if maybe it would, whether you think it would pull back to that sort of resistance area it broke through and maybe find support there and a possible entry just for a little starter position if it did that.
Yeah, you know what I'm thinking here? Just from the tone of your voice, my sense is 2673. Let me just write this down. My sense is that you're looking at this. Maybe we can't talk about it as an intermediate term. To me, intermediate term could be 3 weeks to 3 months, but it breaks over the 2 week to 3 week period of swing levels. So if I'm correct in assuming that you're looking at this as a stock that has a potential, if it can fill the gap below the 26.73, the high was today 25.93, so it's real close, another 80 cents, and it starts to fill that gap. If you're looking at this as a stock that has the potential to at least climb towards the major last peak, or the only last peak, in fact, that it's had, which is at 33.45 to 33.44, that the highs of the week of the 22nd of June, 29th of June, I'm kind of in your camp. I tried to get this from my subscribers recently, which I think we took a tiny loss. I can't remember. I think we took a small loss. And I was upset because my thinking was absolutely correct, and I should have been a little more courageous. I do not like my subscribers to take losses, certainly never more than 8% or 10% max, because, a couple of those could add up. So I like small losses. I don't mind missing potential bigger move, as long as I can cap the losses, because when we do get a move, it's usually a pretty nice one. So this is what I'm looking at here. I kind of like what I'm looking at technically. Fundamentally, this is really new territory to almost everyone. Facebook, I don't know how, there's nothing else that you can really gauge it against. So my suspicion is, if anybody ever wanted to sell Facebook, they are out of it. My suspicion also is that people are going to there have been so many false starts that have taken it back under $20. My sense now is that regardless of what the market does, this stock, at least for the intermediate term, and there again I'm going to say 3-4 weeks or longer, is that this 200 period exponential moving average in the daily, which is at 20, let me just see, it's been covered up, at 25.47, 25.42. My suspicion is that between 25.42 and 23.41, which is the 9-period exponential moving average, that's a really good base of support, because it's got a rising double cup formation, which usually says as long as you're starting to make higher highs and higher lows, your trend has now changed to up. Here's my recommendation. You can think of it in three lots. One is to nibble right here, saying, you know what, I've just bought Facebook at the highest level it's been at since July of 2012. So that's one way to say it. And then you say to yourself, but that's good, because if it goes higher, I'm getting a sense of Facebook's action in relation to the general market. Then there's another buy I would, and this one is really just a nibble, because you are buying the most recent high. In fact, it's the first high of substance in a stock that has not yet proven that it can go beyond a peak D, pull back, and start a brand new buy mode. This could, in fact, be leg B and not leg E, because the MACD is holding really well and the stochastic's good, but it's done that before and it's pulled back. Here's my thinking. You nibble on it somewhere here if you want, but I really mean nibble, because this is your little pilot light that's going to give you a lot of information about Facebook, knowing that there could be a pullback of $1.50 in this particular position. Hold on, I'm going to outline it, because this is my thinking, and I might develop a strategy, something like this, because I think it's showing here it could be one of the stocks that moves against any market trend if there is another downtrend. So hold on, and I'll be back with Dan in the Cayman Islands. Dan, can you hold on?
Yeah, I can, thanks.
Good, I'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. You're back. Basil Chapman, Tiger Technicians Hour. Dow's down 102, SP's down 10. And we're on right now with Dan in the Cayman Islands. And we're looking at Facebook. So Facebook trading right now, $25.89, up $1.88. So it's up 7.88%. The general market's down 0.70%, so it's obviously doing a lot better. And this is my suggestion. Then, the more I thought about it, the more I'm convinced that as a potential more intermediate-term trade, I like this stock very much. And I'm going to suggest two things. The one is that you do have $25.88, just a nibble right now. It's a startup position. But the real position that you want is when it gets, and I think that's so what you said, the 9-period moving average is at 23.42. So if this second cup formation has another mini cup, and that's kind of what should happen, it should not be deeper than that. If it holds at 23.42, and I'd even say 23.42 to 22.77, that's the area of major support. You can do. The second part of it could be this way. Either you say, I'm just going to put in a bid at 23.50, which is a little bit over the 23.42 support, and that one is going to now be like the real starter position. So it's still not a full position, still not a big position, but it's the real entry because that's the one that you would like to get with a sudden spike that is no more than 2 days. And by the third day, you want to see this back into where I've drawn here as the right side, left side time price match. So you want to see it get back into the 24, no, I'm sorry, not 24. That would be 20. Yes, it is. It's 24.50. So you put in a bid there. But I would also do something else. I'd have a bid on the upside. Because if the general market is taking a breather now just for a couple of days and then it starts leg C up, or in some cases there'll be new leg B up in the general market like the Dow and the S&P, there's a chance that this doesn't pull back. So my other advice is that it's a lot riskier, that if you want, you could make the starter position here at 25.89 just a tad more than a nibble. And then the next position lower down, you can't go as heavy. So you're sort of splitting it between the two. If you miss it, and Facebook actually takes out and closes above the low of 26.73, the low of the 26th of July, what I think you've done is you've set in place a support level that makes the 24.30 to the 23.50 area really strong support. So what happens if you start a little position now and it actually spikes higher and it goes to 26.90 and then suddenly takes a dive and comes back to the 23.43? Well, this is the position that I would have. So you got one position, you got two positions. There's a third position that I would have, and that third position says if it actually touches 26.74, that's a penny above the 26.73 level, the next pullback, you can put in an entry point, and that entry point could be below what you entered in. If you got in, say, 23.50-ish, you could put a bid at about 23.20 to 22.90. So you see what I'm doing? I'm covering the upside in case it doesn't pull back in the near term, but it starts to show that it's got real strength. And I'm also covering the downside. And I'm saying that if everything works out the way the chart pattern seems to be doing, it should not break below 22.70 over the next week and a half. That's just the pattern. If it does break under that, then the total of your position would be something like 10% risk, 10 to maybe 11%. And I think that would be a reasonable risk. And as part of your portfolio, it should not be a major part of your portfolio, but it should be a part that you think for the first time has potential to the upside. And the weekly chart is showing that it has signs to actually climb. And there the 200-period moving average on Facebook is at 26.32. So you see how I'm trying to put the package together? I'm trying to say there's a left side high of 33.40-ish. That would be my upside target if Facebook is able to climb into the mid-26s. It'll be very positive.
Okay. Thank you very much for that. That's a great...
have a great weekend. Thank you for calling, and let's see how that works out. Thank you very much, Dan. With Dan in the Cayman Islands. Now, folks, there are a number of stocks that have had either major pullbacks. I'm talking about major. I'm talking about from the highs in the 50s, 60s, 70s, 80s that have come back to the single digits. And there are a number of stocks that were just off the list for quite a while that have done very well. And I want to focus on those in my newsletter as the stocks that have the potential. And I have to keep saying potential because you don't know. You just, these are odds that you're trying to play. But it has the potential in each case to be able to ignore to a certain extent. For instance, one stock that we've got today is up at 52-week highs. Done very well for us. And it was a stock that no one even looked at. I didn't even look at it for ages until it came to my attention. And I love the chart, and it's very much like this under the radar type thing, although now people are starting to talk about it. So it tells me, be careful, because in fact you could have some kind of a pullback very, very soon. But even then, it's a stock that's holding well. The weekly says it's only in leg B. I like that. The monthly is starting to improve tremendously. That's the way I want to play this particular phase of the market. I want to be kind of market just for another day or so, unless prices come into where I've said to buy a particular ETF. I want to be a little bit more market neutral, looking at specific stocks that I think have the potential to give profits on the upside and the downside. That's where the basis for the ChapmanWave, looking at higher highs and low lows, is really important. So I needed to cover that. I had a question. I hope I can find it here. The question was, I'm going to just go back into my email here. Yes. Okay. The question was the QQQ and Apple relationship. So here's the QQQ. I'll keep it with the white background for now. You see, when you're looking at, I like to look at the longer term charts first and then come back to the small charts when I get a question about my overall viewpoint. My overall viewpoint is that the Qs, the NASDAQ Power Shares QQQ Trust Series, are still holding well, although there was a moment that it nicked, the Q's monthly chart nicked the up channel support. It is now back, sitting right on the 9-period exponential moving average. The MACD is turning down, but still pretty good. And the stochastic still at 84%, but it's making lower highs each time the Qs make higher highs. So that says to me, okay, is there a big influence in that? Well, let me just go to the weekly chart and say, well, the weekly chart says you've got a kind of a zigzag pattern. That zigzag pattern went from 68.55, the high back in March of this year, pulls back to the 60 area, and then runs up 10 points to 70.58 to PE in the ChapmanWave. A very quick A, B, C, D, E. I was asked about that a couple of months ago, and I said, you know, it's not that quick. And then the more I looked at it and said, you know what, to get to E in that amount of time, that is quick in this kind of straight up move. So yes, and what happened is that there was a doji high at 70.58. I love those candles. There's certain candles that we spend a lot of time on in my webinars. You just learn those candles. They can be a tremendous help, as well as using, say, in this case, the 9-period exponential moving average. Well, if the Qs are not able to climb to the 65.30 to 65.60, where there's a lot of resistance, and then go above that, above the 9-period exponential moving average, the MACD is saying, hey, you know, I'm really struggling on the weekly basis. I need at least another 1.5 to 2.25 points in the Qs to be able to even start thinking about crossing or getting towards the 9-period moving average in the weekly chart. So that says to me, okay, what's the big influence? Well, Apple obviously is a big percentage influence. It's not everything, but it's big enough. Now look, Apple's done pretty much the same kind of pattern. It goes to quick A, B, C, D. In ChapmanWave, you want the quicker you go to a D, quicker you can see some kind of a pullback. Look, it pulls back, goes to a lower low, below the cup low of, I should have typed that in, 528.66. So 528, let me just put that in, 528.66. I love to have all those numbers right there at my fingertips. 528.66. The most recent low in Apple was 505.75. So at 505.75, there's been a fabulous, remember I was on air at the time that I was talking about this about a week or so, a week ago Friday, maybe a week ago Thursday, Friday, and I said Apple could have a very big rally. It could even turn out to be 50, 60 points. And I said, oh, but wait a minute, that's only 10, 11%. Now that 9-period exponential moving average is absolutely critical. If Apple is able to climb above the candle high of 590.74, the candle high of the week of the 9th of November, that'll say, good, now I'm sitting above the 9-period exponential moving average. I can treat that as a support, but it's not going to work unless you get that MACD to start turning up. So Apple's a big influence, but in the scheme of things, if you look at Apple, although the 705.07 high of September, 200 points lower to the 505 level, is a huge percentage as well as a point drop. Apple is still way in the upper range of its major level of high level support, and that's a consolidation that we've got to be respectful of. Now the technique of what I'm looking at says, if Apple was to suddenly slide below 553, and you know the season's coming up, holiday season. We've just had Thanksgiving. Holiday season's coming up. There's every reason to believe that Apple should sell a lot of their products. My question here is, what if Apple, I think I'm starting to see discounts on Apple products. I don't remember ever seeing that before. What if Apple has reached this momentum level that says it needs a timeout, it needs to regroup, it needs to rethink how it can move for the next 150, 200 points up? If that's the case, then I'm watching Apple, because if Apple starts to rally and then makes that the arch formation, that would turn the Qs as well into an arch formation, and Apple is not able to climb into I'll tell you the level now that I think would be really important above all those dojis. So Apple right now, yes, if Apple is not able to climb above the candle of the week of the 26th of June, that's 635.38. If Apple is even able to get, I'd be really impressed if Apple was able to get into the 630s. If Apple's able to get to the 630s, I'm going to say, you know what? If that MACD turns up and the stochastic continues running, Apple can really succeed. But that whole area, from the 590s to the 615s, is going to be absolutely critical as far as I can see visually for Apple. Very, very important. Now let's look at my four horsemen. We don't own any of these at this particular time, although I'm trying to nibble at least one of them. GE broke the uptrend support level. It held the 200-period moving average at 20.02. It's rallying. The rally so far on the daily basis is okay. It's not great, but at least it's rallying. IBM rallying. Hasn't been able to get to 194.90. That's the 200-period exponential moving average. Very important. If GE is able to move 80 cents from here this week, that's going to be very important. If IBM is able to move above 195 and close above 196, I'd say, I'm impressed on the shorter to intermediate term in that kind of action. Triple M did very well last week. Now it's given back a little bit, but if Triple M trading at 89.94 is able to get above certainly 90.33, that would be important. That's not good enough. If Triple M is able to climb above 91.23, the high of the 6th of November, I'm going to say, don't get too short here, because there's still upside action left. But if all of these stocks drop a point from where they are right now over the next day or so, that's going to say, be careful. UTX is another one. UTX, nice action today. UTX said to make a new recovery high, 78.66, 78.68. Yes, it did. So UTX, my pilot light in this, what I call my mini Dow quartet index, in parentheses index. So what I would say is, there are signs, especially if you base it on the volatility index, the VIX index, that the VIX index is just showing no strength whatsoever. It's up 65 cents at 15.81 today. If the volatility index by Thursday or Friday starts to climb and gets even close to 18.26, that was the level that that's the area that 200-period moving average repellent zone. If it can get anywhere close to that, that will set in place the chances of a slide later this week. But look at this. The TLT has had a very nice bounce, and they're stuck in the trading range, and the dollar DXY is also stuck in the trading range right around the 200-period moving average. They're not acting too well here. I'll be back straight after this Downtown 90.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Dow's on 80, S&P's on 834. This is just a digestive day after the terrific move up. So far, I think it is. I'm looking at certain stocks that are acting very well. I think they're still going to continue acting well. And my bias right now is to be looking for longs and just deal with it if we get some kind of a sell-off later in the week. I mean, just that's the way it is right now. If you're looking at the euro-dollar, the currency pair, is in strong leg B up. I have to call it a gray. I should change the color. A gray. Actually, what I've done here is I've used red and green. I'm trying to see if that works a little bit better visually. I'm a very visual person. Yeah, I think actually that looks even a little bit better than the other way around. Okay, I'm probably going to stick with something like this for those charts, the white background charts. Now, what I'm looking at is if the euro, it hasn't done it yet, but if the MACD, which is at 80.24, is able to see the euro itself push above 1.302, that was the high on October the 31st. That MACD should start to get to 82% to maybe 83%. And if you get those guys all together with gold, I just have to, I didn't think gold would go that far. So far, it hasn't really gone that far. It's just a retracement after the big move down from 1798 down to 1672. But it's big enough because it's gone a tad higher than I thought it would, and it's gone a tad higher than the left side 1755 level that I said on the 17th of October. That was the high that, if it held above that would be good. Now it looks to me like it really can get to a leg C and a leg D based on the MACD and stochastic. So that tells me that, yes, there really is some upside potential. And the other thing also is that it gives me reason to feel a little bit more encouraged that my bias at this particular point is to try to find some more longs to be able to look at the upside, but I'm not skipping out on those on the shorts, because I do believe that if you get the trend right, the trend is your friend. But within the trend, there are counter trends, and if you can identify the strong counter trends, then do it. Then don't be afraid to go, against any of the trends, but you've got to have a very cogent plan. Now, here's what I'm looking at. Since we're just about to wrap up, a couple of things that I'm looking at. If the Dow is able to hold above 12,870, 12,840s, if it breaks out 12,840s, this could be a different kettle of fish. But if it's able to close today closer to a minus 43 on the Dow, minus 5 to minus 420 on the S&P, and the Qs in fact hold very well, and the Qs, which are the composite index, is down 6. If the Qs close positive, that'll be the digestive day complete, and we can see an update tomorrow. More importantly is using the three bears. You remember I always talk about them, VIX, Dolly, and Bondi. That's the VIX index. If the VIX index stays under 16.06, stays in the 15s area, that says, you know what, you can have another retest of the 14s at some point. And that's going to be very positive to the market. But if that volatility index starts to spiral and goes towards the 1680, 1720 level, that's going to say, we're getting close to the 18s. Then I'd be looking at this market starting to fail. And it's very simple for me as well in the TLT. The TLT says it's at 125.46. That's the Lehman 20-year Treasury T-bond fund. That is really important, because the TLT spirals above 127.19. My suspicion is that there's a good chance that the market will pull back as money is going to go drifting back into, we call it the safety of something that you're going to pay 125 for, that you're only going to get 100 back. But anyway, that's the way it will work. So stay tuned for Larry Preservento, and as always, I'm really waiting to hear what Larry has to say. And have a great day. Stay tuned for all the TFNN hosts, and I'll be back tomorrow. Check out my opening call, and please check out my webinar coming up Thursday and Friday, December the 6th and 7th. All day should be great.